in my experience, we are now at an intersection of a bunch of trends that have been going on for probably the last 20 years, if not more. And so my fund is investing in what we call the machine economy, which is the overlap of financial systems, financial infrastructure and sort of economic systems, blockchain protocols, and the development of artificial intelligence into machine labor, into something that actually contributes to GDP and creates an engine of economic growth, which is kind of a longer-term view of what we're doing, and not just the science fiction uploading of people onto the metaverse and sort of turning all of us into goo that goes on rockets into Dyson spheres around the sun. That comes later. So what I want to articulate is that this is not a one-time crypto theme. This is not like the narrative rotation of meme tokens into AI. Rather, we are at an outcome of a process that's been going on probably since the mid-2000s. And there are a couple of sectors that I'm going to highlight in terms of what they've contributed towards this development, towards the machine economy, and the role that they've played. And for us, for the fund, and for our experience, it starts with fintech and the distribution of financial products. It goes into crypto assets and computational blockchains with a DeFi economy. And then it walks through the developments around machine learning, neural networks, generative AI, towards being a productive agent of economic growth. And finally, it lands into the opportunity that we see today, which I think is quite unique and sort of has boiled up to a real revolution. So let's kind of start at the beginning. Like, this is a crypto conference, but we're going to zoom back out. If you think back to 2006, in that moment, it was the introduction of Web 2, of the attention economy, to the financial sector. Sort of the marquee project at the time for this was called Mint.com. Does anybody remember Mint.com? Rest in peace, Mint.com. I'm so sad to see it go. Mint was the first big fintech exit to Intuit. It was also the first project to sort of liberate financial data and make it available on the internet. And you can trace from Mint.com a whole bunch of stuff. So if you're a user of Robinhood, or Chime, or Revolut, or Monzo, or even Coinbase, that user experience has deep roots in the way things were designed in that moment. And you can see the application of largely Silicon Valley to financial services products. What's happened as a result is that instead of going to a store or a bank branch or an ATM, you have all this stuff on your phone. So the distribution layer of finance has turned digital as a result. You don't expect to talk to a person, you expect a mobile app, you expect a website, and this is sort of the top layer of internet finance. The next key to what we're talking about, of course, is Bitcoin. And the key element of Bitcoin that's relevant is the invention of a digitally scarce financial product, or a scarce digital asset that lived on chain. Prior to Bitcoin, you could not have a scarce digital asset. You have Web 2 digital assets, which you can copy and infinitely replicate. They have zero value because they have no marginal cost to produce. And so Bitcoin gave us the first key to manufacture financial products for the internet. We already have digital distribution. Now we have the ability to make one, to create a factory of financial products on the internet. A little bit later, but in the same breath, you also had the development in neural networks and artificial intelligence around 2014, 2015, which has a history that is quite long. It has a 50-year history in terms of the underlying artificial intelligence math and the design of neural networks. But what happened in 2014 is that because of the processing power that we have in our hardware, the capability of a neural network to do a human task exceeded the human ability to do it. So there's a competition called ImageNet. You decide if something is a cat or a dog. You have, some cats are very dog-like, some dogs are very cat-like. It's hard at the edges. But in 2014, neural networks made a lower error. They were more accurate in determining what the image was than an average human. So this is one of the kind of the key examples of machine judgment becoming better than human judgment. And of course, every other sense and every other human capability is subject to the same laws, right? So on the right, you'll see a chart of human performance across different things. And as the hardware has become better and the software has become better, machines have come closer and closer to replicating more and more of our capability. If you go further around this time of neural networks and towards the introduction of Ethereum, blockchains became computational. So you go away from just a single asset that can do digital scarcity to having chains that are computers, that are application stores, right? So it's not just Apple that can offer you an application store. It's a global decentralized network on which you can run software. And of course, we know that today we're looking at billions of users and accounts, billions of accounts, hopefully millions of users, and soon billions of users in Web3. And that quickly translated to having real industrial financial power on blockchain networks, right? So we all know DeFi as a sector today, but the introduction of these manufacturing capabilities has allowed us to have payments, banking, lending, insurance, asset management, trading, and all of these things in one open source infrastructure that is fully composable and permissionless. If you're a finance person, this is insane. The asset classes don't usually cross. Core banking and portfolio management and the Visa payment rails are not the same thing. But once you put everything onto Web3 financial infrastructure, they become interoperable, right? And so today we're at 100, 200 billion or so of assets. This is trillions of assets in a decade. Now we get to 2022, just a couple of years ago. Pretty much everyone said that you've used ChatGPT. And the transformation that happened in machine learning or in AI went from being sort of a human judgment replacement where you start with information, you run it through a machine learning model, and then you have an outcome, some sort of decision, towards generative AI, where you don't need to start with the information. You're manufacturing information. You're hallucinating outcomes. So when you're hallucinating outcomes, all of your thoughts are hallucinations rendered in our minds. When you're hallucinating outcomes, you are literally performing labor to create digital assets and digital products, right? So the outputs of artificial intelligence today are all digital. They're not sandwiches. They're not laundromats. They are all digital objects. And of course, we have a magnificent machine infrastructure already in place for owning digital objects, for transacting in them, for having exchange, market venues, and so on. So we start asking questions of, we have this engine for GDP, right? We have this engine of creating digital objects and digital assets. This thing is scaling into the trillions, right? So if you look at projections of economic activity, we'll expect 2 to 4 trillion of net new economic activity coming from generative AI. On the other side, we have financial infrastructure built over the last 15 years purposely with the sort of the goal of owning and moving around digital assets and doing that in a permissionless and open way. And so the core of our thesis is that these two things are the same, that crypto is internet money, and the internet is primarily robots. 60% of internet traffic is robots. At least 20% of Twitter is robots. 95% of trades put into the capital markets and equity capital markets is robots. Probably at least 10% of you are robots. The people that didn't raise their hand for having hands at the beginning are absolutely robots. And so what we're coming to is the confluence of all these trends to create what we're calling a machine economy, right? Not just software on its own or hardware on its own, but the marriage of human productivity, the creation of GDP, and then the use of computational blockchains and machine networks to intermediate the financial activity. Today, there's kind of, if you spend time at the conference, you'll see a bunch of individual symptoms, right? And crypto is all about like these stories and memes and rotating, and it's very short term. And so today you'll see this as the deepen sector, the deepen theme, or you'll see it as the AI crypto theme with lots of individual companies that are fantastic, that are all here. These are the spaces that we invest in. So you're starting to see evidence of this coming together. But I think the really important takeaway that I hope to leave with you is that while they may be individual symptoms, this is something that's been boiling and bubbling up for a long time, and that there's an opportunity not just for like a trade, can I get into this AI token before the market collapses? The opportunity is to build real economic activity that's using these new primitives, that's using this new infrastructure, taking seriously the idea of AI agents doing useful things, taking seriously the idea of having non-custodial information, being able to self-custody your own deepfake rather than delegating that to Microsoft or Apple, and really trying to build businesses that are productive at this intersection. So I'm going to leave you there with these ideas. If you want to get in touch, if you're building one of these companies, check out Generative Ventures. Thank you very much.